What's up, Gonzalo? Cool name, man. Where are we close? What's our print? 2260. Cool start to the day. Always very cool start to the day. See that? Classic. Classic. Yeah, I'm right with you, Johnny. That's tough. I mean, week like this, the strikes you like to sell, they're just hammered, man. And they get so low, it's like, do I even want to sell? Like, you don't even want to sell because you're like the risk that something's about to pop off, you know? Doesn't feel great. Hey, thanks, man. I appreciate that, Gonzalo. I do my best. I do my best to try to understand what's going on myself. I'm just glad that I can help, somebody else besides me too. What's up, Pro Styles? What was that? Wasn't that like a Wasn't that like a haircut? There's like some kind of haircut company. There's Master Cuts. I know, man. They're not good this week. I think if you did 25, see, I don't super like, I mean, maybe it's just because I don't have the great, because I keep expecting IV to go up, sometime soon. Like, I'm not trying to, I'm not trying to sell a 25 right now. And that's what's so wild. It's like 25s for next week are 15 cents. It's like I'm not selling a 25 for 15 cents, man. I'm not. You can keep that. That's no way. And the July 18ths are so low now. I mean, I get that they stayed a little bit buoyant toward the end of the week, but do not like, do not want. Yeah, I mean, there probably is a way to do that. There probably is a way to do that and, be able to get in, get out, roll. I know there are ways you can do that. I don't want to sell a 24C and just be like, oh, I'm gonna get assigned. Oh, like I don't want to do that. I don't want to do that. I want to be like, oh, there's no way 30 is closing in the money. There you go. I feel that way when I sell 30s. I don't feel that way if I'm selling 24. Dope. 27 is cool. It's just nice, right? 27's on the other side of the call wall, right? We love that call wall. It's so nice because it's a wall, right? Magical things happen around that call wall, man. Magical things. Like the most you like we've had, right? We've had weeks. Didn't the week that we did 37, the week we did 37.50, I think we closed below $30. And then we pop back up beginning of the next week. Magical things happen around those levels. Let's see. Do I think it's all right for them to incorporate investor tinfoil in their marketing, knowing how retail reacts to tinfoil? I mean, on the one hand, right, it's their brand. I think on the one hand, like it does show that the company, like personally, I like to see some of that because it tells me that the company isn't ignorant of the lingo and like what the community has produced and certain ideas. So like I think very much that came into focus these past couple quarters with the signals that we've gotten from Ryan Cohen regarding GameShare stop away. Like he knows the GameShare stop away meme. And so a number of different things like the Warren Buffett tweet, retooling the investor relations page so that it looks like Berkshire Hathaway's page. Like I think that was a clear but plausibly deniable homage to GameShare stop away. So that sort of thing pops up, and I go like, yeah, like give me all the, confirm my tinfoil for GameShare stop away, please, please. Um, so I see that and I go, okay, cool. Sometimes I wonder where it's like, did you, was that that might not have been a Brian Cohen thing. That might have been, marketing team being like, I want company to know that I'm good at my job. So, I will put in whatever it is. I'll put in this like, hang in there in whatever's going on with we still haven't got any like news on that, the push to start arcade, right? When are we gonna get that? I'm wondering. Because that's like unconfirmed tinfoil with the hang in there poster there. So I mean, if it's done like purely for marketing purposes, if it's done like with an intent to just kind of hype up the community, but there's nothing substantive behind it, it's not a way that the company is like attempting to communicate with us in a meaningful way. Well, then it gets a little, how would you say? I guess duplicitous. But I'm sure there's another more colloquial word that'll work better. But in any case, so yeah, I mean, I get they're doing the marketing thing, but it's like if it can be a meaningful communication and not just pure marketing, that's sort of more. Then I value that. So hopefully that answers your question. Yeah, you're probably okay with that. You can always, yeah, like, and you can always roll, right? And you'll probably be okay too because IV will be up, right? If you need to, as long as you're doing stuff for net credit, then you're fine, right? Diagonal calendar spread, interesting idea there. You could do that. Worst case, right? Worst case is you're just out. You just don't get anything, right? I'm trying to think how that would work out because you could get assigned, right? You could get assigned on the covered call, in which case you have to exercise, unless you also have a very sizable share position, in which case when you exercise the covered, if the covered call gets exercised, then if you get assigned, um, then you're getting assigned on shares and not your call. I don't do them super often, but I would just say, go run that through a profit calculator thing. But I see the temptation to play IV. I have to think we're gonna get something soonish. Something. So we're literally the lowest we've been in years. Maybe since before 2021. I'm trying to think. Definitely, I haven't seen anything lower than we've been at the past couple days. If we bump out, let's see. Let me take a look at my thing here. Yeah, it doesn't even show up. It's way lower than April of 2024. It's sort of, no, it's still lower. Maybe like October like late September, late September 1963. What a very special time for me. Late September, what a night. Yeah, it looks like maybe October 2023 or September 2023 was the last time we saw IV that was below this. So it's low. It's low. Oh, I missed that. What did PSA say about it? I missed that. How I feel about buying long dated at the money, just out of the money calls and selling back. Yeah, I mean, right. It's a little riskier than doing a like a share play or something like that. But if you want to honestly, like, going long volatility right now is the least risky that it would be, right? Like, in terms of, it doesn't mean it's going to work out, but if you want to go long volatility, when you see really, really low IV like this, it could, it can pay out. It, it's important to remember that with a long, like if you're going a single leg long options contract, if you're going a single leg long call, it's still going to be structured not in your favor, right? It's still structured to favor the dealer in terms of the probability of how it's going to work out. But it's less probabilistically against you at this point than it would be at other times. Let's see, when IV was high. If you're going at the money or you're going slightly in the money, that is, even better, right? In terms of your advantage versus the dealer's advantage. Going with, the old tried and true. I remember what I did when I was playing that like last October, right? When I was trying to anticipate the November, December run, was I picked $20 as a strike, started getting into that position a little bit when we were kind of in the 21s, 22s. And then when we got into the 20s, kind of added to it. And then that worked out because NIV went up a lot. And then the price went up a lot too. So, but intrinsic value is a good way to kind of figure out like kind of what your leverage is like. Going pure out of the money, like pure IV stuff, it can really pay off, but obviously it's riskier because if you don't end up with any intrinsic value in the contract, then your position goes to zero, which is most of the problem that most people have when they try and go trade options for the first time, or even for a while when they're beginners. Is that's what they go and do. Is they go and go like, oh my gosh, if we go up $5, these contracts will 10x overnight. It's like, but then we don't, and so then they lose everything. Speaking from experience. Okay. Yeah, I mean, be careful. Kind of low risk compared to what it could be otherwise, but right at 25, still out of the money. Although if you're buying October, my guess is, probably if you're holding anything that's October related, targeting, if it were me, if I were in an October contract, I would probably target like earnings exit, something like that, like 2 weeks prior to earnings, look and see what we do. And then kind of, if it were me, however much up we are based on how IV behaves prior to earnings is like, unless something happens before then. Yeah. But that's kind of, I think that's as late as I would hold those. It's 25. Yeah, a lot of ways before, it's a long ways before you get there too. So check and see like what the theta situation is like. Although, I guess I have a hard time imagining that we would just stay below 25 and go sideways for the next 2 months. But I guess you never know. Um, I gotta think 2 months with kind of nothing like that happening is a little peculiar. So I mean, monitor it. I would just say be careful, right? Don't get caught holding it too long. If you see you're up 30 or 40%, on some random move in the middle of nowhere in July, like, don't be afraid to take profits. That's all I'll say about that. Hola, Kai Iris. Hi, Iris. Nice to meet you. What's up, Tom? Hey, Simple Rick is back. Come home, Simple Rick. Still waiting on $16? Appreciate the like, though. Let's see. Alexis. What's up, Alexis? A lot of sentiment in the community seems to think that the market as a whole is setting up for a major rug pull soon that will take GME down with it. Do you monitor the broader market? What are my thoughts the next 2 months, market stability wise? One, I will say, genuinely, market rug pulls, right? GME crew is actually tends to like market rug pulls. I think the idea there is it typically distresses other assets in such a way that it causes, the necessity to something like close out short positions or something on GameStop. I don't know what the mythology around that is, but typically the sentiment regarding GameStop and market moves down is that, oh, this is fine for GameStop. I'm not sure to what extent that was true or untrue last year. Last summer, we definitely had seemingly for a while that has typically meant kind of weakness in GameStop. Major weakness in the market has meant major weakness in GameStop. That was not the case in April. In April, we started moving pretty aggressively to the upside, despite the fact we got the whole tariff thing. As far as what the market is going to do, yeah, just got some new all-time highs. I think a lot of it is going to be pertinent to potential uncertainty regarding geopolitical situation. June 30, we are going to get the call side of the JP Morgan collar trade is going to get rolled on Monday. So it expires on Monday. So if we go take a look at our gamma, we can see it over in SPY SPX. So let's do that, actually. So this is a good question, Alexis. So can I get my head out of the way here? No, I guess that's fine. So yeah, so you can see here, give this a quick little refresh. Yeah. So I mean, we did get a big gamma expiry today. It is call dominant, so that's going to cause a little bit of reshuffle here. But as you can see, right, we're probably not going anywhere into Monday based on how much call GEX we have. So basically, right, over in SPY, when you have a large accumulation of call GEX, that dampens volatility. So dealers, of course, are going ahead and selling call options, which means they're hedging those by buying shares as those go into the money, and selling shares as it goes out. Let me see. Do I have that correct? Right. They're short calls, so they have negative delta on their books, so they're hedging that by buying. Yeah. Largely, that's the case. However, yes, in terms of gamma, however, as strikes go into the money, right, gamma hedging is decreasing. So that acts as a volatility dampener. As strikes go into the money, right, then that starts to slow down. And as we go back down, right between these call dominant strikes, the same situation happens. So this puts a dampener in volatility. IV goes lower. Because IV goes lower, you're going to have much tighter trading ranges based on how much gamma is going to end up accumulating around close price ranges, whereas strikes that are out of the money are going to get de-hedged sooner and aren't going to be affected by intraday price action as much. The inverse is going to happen with respect to puts, but not so much with calls. So as we can see here, right, volatility dampener into today, volatility dampener into Monday, right? Since we have all of that call gex that's accumulated, we can take a look at it from a strike by strike basis. So yeah, so our call wall over in SPY is up at 615. So yeah, that served as an upside target, but often serves to keep us kind of hedged in there. So we saw that take place today in SPY price action. Yeah, if we take a look, let's pump down. If we take a look out, let's see for 630. Yeah, 630, probably going to end up still trading in here. Let's take a look at the weekly, though, which is going to be the third. Definitely bumps up a little bit more into the third. Call wall moves up 620. That's a bit more of an open question mark. It's not looking bad into the end of the week. Still decent accumulations on the first, second, and the third. So, I mean, basically for all of next week, it's still mostly call dominant, but a lot of this is going to get rolled. So don't know what's going to happen to all these calls. These calls will get rolled because part of this is the JP Morgan position. Let's take a look and see OPEX. OPEX is now call dominant. Yeah, we're kind of looking pretty good out into just in general, the way people are positioned right now is optimistic out into mid-July. So that even happened recently. Even like last week, we weren't quite so optimistic. So options right now, options is not showing, to come back to your question, Alexis. At least the next 3 weeks, options wise, it's not looking bad. I mean, it's not looking bearish. It's not looking like we're going to get volatility. Certainly not, I think, Monday, based on that positioning. Maybe we get a little chop once that position gets rolled on the JP Morgan collar trade. But yeah, it looks stable for now. Question mark will be on the 8th, which is a Tuesday, as to whether the tariff deadline is going to get extended. I think the general expectation is that it will. The tariff pause will get extended. I think the general sentiment is that it will. So more or less right now, I'm not seeing weakness. One thing we can also do is we can hop over to we can take a look at SPY over here. Yeah, oh, how about that? We basically made the call wall by the end of the day. Nice. We did kind of hard charge up here. How are we looking? Let's see. Let's get Ultimator's thing in here. Yeah. Oh, this game's not. Back to SPY, please. Yeah. So if we take a look at the PMO daily, it doesn't look like maybe we consolidate, right? So like maybe we come back down and we consolidate around 600 or something like that. But as far as like a bigger, broader pull down, kind of going into the middle of the month, not yet, I think. Let's take a look at the weekly PMO. Oh, weird. This is back. Why did these come back here? Yeah. Yeah, weekly. Look, you see, weekly, we're SPY's just getting started. So probably, honestly, probably we just go up from here. Just kind of as an initial impression, if we're like really zoomed out, we're taking a look at our weekly situation. It really looks like we're going to see kind of do a 2021 maybe. I think that's why. I do think that's why, in part, Trump is really pushing for rate cuts, so that like the market will pump, and then he can go see rate cuts. I asked for them. Powell so slow. He could have done them sooner, but I said, hey, let's do them sooner. Maybe now. Maybe you want to do them, but Powell, he's so slow. Then he can do that thing. For whatever purpose he has to do that thing, he can do that thing. And then and then the market can pump, and then things look good. Though how much more of that we get years down the line, I'm not sure, but yeah. So I wouldn't necessarily see we're going to get rugged market wise soon. I do keep track of that. I do keep an eye on that on a regular basis, but I would not say that I see any kind of urgent or imminent signals that such a thing is going to happen soon. It can develop very quickly. I have seen it develop very quickly, but it's not developing yet. That's what I'll say. Tie a nice bow on that. Hopefully that answered your question. Yay! Go see him, man. When 16. He's waiting, folks. He's waiting. We took the hopes and dreams of a guy who just wanted to see $16 and put it into a cookie. Yeah, I mean, like I said regarding IV, if you're trying to go long IV, like it's hard to find a worse time, or it's hard to find a better time to do it than now, in the sense that like if we're at historic multi-year IV lows on GameStop, it's hard to mess that up. All you need, right? All you need is a little, a Feb 14th kind of day. All you need is something like that. All you need is an August 30th, and then you're looking good. Let's see. Yeah, I don't know. Why do you want to roll those? I'm not sure what your advantages would be by rolling those rather than just closing them and then maybe waiting for a more favorable entry on the August ones. It depends what you think July is going to look like. If you think we're going to get some IV coming back, then right. I had July monthlies going into the end of last week. We had a much lower IV week than I thought we were going to get this week, but still those were down quite a lot. I think those only went down maybe like another 10 cents or something, but I exited those end of last week with the expectation that, hey, we're going to get this day where IV is going to come back. And even if IB bumps up like 10 percentage points, that's gonna have some profound stuff for what's going on with the monthlies. So that's going to have a profound effect on July OPEX. That'll have a profound effect on August OPEX, something like that, presumably. So I mean, ideally, what you would want to do is exit whatever these are, right? Exit something that's nearer term for a price you like or something like that, and then wait for IV to come back, and then time it so that once IV is back on the tape, then you're entering that next contract at a favorable volatility point. Right now, it's tough. It's like I'm very hesitant to go ahead and enter new cover call positions because IV is so low. On the one hand, like you can go really short term. The problem I would say with the August ones is there's a lot of weeks left in them, right? That's August 1 is that's 5 weeks. So, and it's a 26. Maybe it'll work, right? I mean, maybe we'll just have a super boring July. You can roll them, right? I mean, if IV does come back, you can roll those. But how's that looking per day, per week? 18 cents per week. Not bad. But if we move, right, if we go back into that 25 to 30 bracket, that'll be tough. And then you might just have to sit in those for a bit. But you could do worse than 18 cents a week, I guess, for the month of July. It might work. It's a little riskier than, I guess, in terms of a strike. It's a little lower than I like to target, but, it can work. Oh my God, Heather Jana. Greetings. Oh, nice. I was wondering. Okay. Okay, fine. Doesn't need to be an acquisition. That's good. It means, yeah, it didn't strike me as plausible that GameStop would go out and acquire PSA. Closer partnership, sure. But acquisition, I just, wait until someone's distressed and then put the cash into that, I guess. The market's going to crash at some point in the next 5 to 7 years, right? Good question. Yes, but not until they're exercised, right? So not until they're converted. So, yeah, I think they count for an additional like 140 million-ish shares. They will once they're converted, maybe 150 million. But not until they're actually converted. Yeah. Yeah, I do. It definitely didn't die. It's just it's not as automatic as we would necessarily like it to be. In the sense of like, aha, we've got them cornered. It does seem that. Well, this is the other thing too. A big question I know that has come on, even in the past like couple months has been, how does having multiple GME ETFs change things, right? So we have now GMEU and iGME. To what extent are those being factored in? What effect does that have on the lending environment? I think it's something like, what would I say? Well, too, we do the offering, and then if somebody's going to close something out, like volume just goes so crazy high, like they could close that out. They could close out the FTDs there, and then we wouldn't see it because it would get all wrapped up in. Like, remember toward the end of the, let's see if we can bring up that trading day. Toward the end of the day, remember there was just like 3 million shares that just went like, it was like in a second, or like 6 million in 4 minutes on the bond offering day. Like that could have been clearing FTDs, you know. Like you're not going to get a better chance than when it's 2150, just all right, clear them. So I somewhat suspect that that was held or pushed until like the umpteenth hour, and then they were just like, oh my gosh, clear them. And we didn't see that develop at a time where I guess it would have been more fun for us as retail investors. But um, as far as other ETFs, I'd probably say VT is one to keep an eye on. But then, yeah, the actual GameStop ones. So IGME and GMEU probably. Probably not IGME yet, but GMEU. Yeah. And obviously, you can go, Richard tracks this stuff. Richard Newton tracks this stuff over on his spreadsheet. So you can go check that out. It's linked in all of his videos. So you can go see what that's looking like if you want a centralized place to look at that. Cheers, man. Very, very happy to share the time. Very happy to have the support and the community. Yeah, $9.95 break even in 2027 is essentially $30. So, we only need to go right. We only need to go up a little bit, and those are looking pretty nice. So yeah, that's essentially right. 2-to-1, essentially buying. Yeah, you're essentially buying shares at at 2-to-1 leverage, essentially, right? Slightly more. Yeah. Worrisome about theta burn for October? Like as far as going long? There's a lot of time left in those. So theta shouldn't theta shouldn't catch up to you too much. You're probably not going to start to see that until like September, really. I mean, you'll lose a little bit, but we're still pretty far out. So those aren't going to, especially if you're going like in the money. The closer if you're going in the money, if you're going 20s or something, don't be trading 40s or something way out of the money. Then yes, then that's not going to look awesome. But if you're going in the money, then you probably don't have to worry about theta too much. Yeah. Yeah, that's a good target. For October options, I think that's probably a good target. If you're trying to trade, certainly if you're trying to trade IV. And then if something happens beforehand, in July or August or something, then obviously, take profit on that. But yeah. Man, I mean, bondholders definitely want implied volatility. They definitely want the volatility premium. Sideways is fine as long as IV is good. But IV is not good right now, so they're not really arbitraging those very well if they are. Take a look. How are these priced? These got to be like barely over face value right now. They're a little up. They're actually higher than I thought they'd be. 107. So, I mean, they are getting traded. Yeah. But like not that much. I guess there are a lot of trades today and yesterday. Decent number. They're crawling out. They're crawling out of the hole there. So sideways is fine for the bond traders, but like sideways, but not like this level of that. Like the price needs to go somewhere. There needs to be a reasonable range over a period of years in order for volatility to remain um, in the stock, right? Down around these levels, it's not as appealing, but you know, I don't trade them, so what do I know? Cheers, my friend. Thank you very much. I appreciate you. Hmm. What is? I'm not sure of your reference here, Jeff. Would you mind maybe elaborating on that a little bit? Oh, okay. Well, thank you very much for your support in any case. Cheers, guy. Yeah, I'm not sure what you're putting up here, Jeff. Hey, you're very welcome, Alexis. It's a good question. This is why we have the live streams, right? We get good questions, gives us a chance to go into a little depth there, and that's what I'm all about too, right? I appreciate good questions because it allows me to go ahead and elaborate on some of the stuff that's kicking around up in my head too, put it into words, structure it in a way that it can be understandable. So it's very helpful. So that was a good question. So thank you. Oh, remember the SPACs? Remember the SPACs for no reason? What was Chamath, right? Wasn't that like Chamath's whole thing? Was like the SPAC king? Yeah, it was SPACs. Everybody's going nuts over SPACs, and then it was like there was a little weed stock, like people kind of got all excited about, but that wasn't as big as SPACs. Like SPACs were like, oh man, you got to get into SPACs, and I haven't heard a peep since like 2021 since SPACs. Yeah. Hey there, Wally. Yes, I do pay for premium data. I have a subscription to Unusual Whales Premium. I subscribe to what else do I subscribe to? Mainly, I use Unusual Whales. I also subscribe to Trader View or Trading View. Also Trader View, but Trader View is how I track my trades. Do I get something else? I mean, I have my like streaming platform and recording stuff that I use here, but that's not premium data. I have had some other like I used to subscribe to Alpha Query for volatility data. I don't really anymore. It's not. I mean, it was good to learn. Like some stuff was easier to visualize over on Alpha Query, so I was glad I had it for a little bit. But I've kind of internalized that now and understand how that kind of maps to what I can see over on Thinkorswim. So I don't necessarily need to use it anymore. Um, Other premium stuff. I mean, most everything else I think I get for free now. But Unusual Whales and Trading Views, that's a bit, right? Yeah, it was on the lower side, but it wasn't as low as it is now. It was up. Schwab had it probably up to like it's probably around 69-ish, 68, 69-ish percent composite on Schwab, but not 65. That's very low. Like I said, I think September 2023 was the only time I've seen it lower in kind of the past 5 years, and that was like 63.9. So only slightly below what we're looking at now. I mean, this is, yeah, we haven't seen anything like this in essentially 2 years. You know, close. We got close last October, around the 25th. We got close because that was 68. I think that was 68. They just do swaps. Hey, everybody else gets to do swaps. Why don't we get to do swaps? Oh my gosh, Simple Rick, you should be the next Peter Schiff. Called every single, he's gotten both of the last, he's gotten all 21 of the last 2 market crashes correctly. Oh, dang, did they get that low? Oh, man. Bro, what? Oh. Oh, man, Steven with the call out here. Let's get my head out of here. How do I get my head out of here? There we go. Zoom this in. That's low, dog. That makes me think they also then probably shorted us, is why we went down toward the end of the day. Look, and despite that, borrow fee is down. Why do, like, I don't understand this dynamic. Why is it that shares basically dwindle away to nothing, but borrow fee goes down? That's nonsense. What time was this? Basically into the close. What in the world? I'm going to send a quick message to Richard, actually. Oh, wow. He just messaged me too about it. That's very low. Well, they're certainly at delta neutral. They basically strive to remain at delta neutral throughout the length of the trade. So volatility goes up, price goes up, changes the delta on the bonds. They're hedging dynamically to make sure that they stay delta neutral. So yeah, once they enter the trade, then they can reposition slightly, but they strive to remain delta neutral basically throughout the whole length of the trade. Yeah. I mean, maybe. Could be something creation related. See, the thing is, I could also see us closing below 25, for July OPEX, but I could also see, like, if we're looking at things like lending liquidity, if we're looking at how low IV is, I don't know. That tells me, like, something's got to pop up here at some point. Like if we bounce back to, yeah, we got to 67 in February. And then that's when we did our shoot up to 31. And then IV just increased from then forward. So the 13th was the last time that we had IV that was like actually anywhere close to these levels. So seeing this pop up makes me think like, oh, are we? But even if it's like a little $2 or $3 run or something like that, like that should excite IV. But I wouldn't say anything crazy. I definitely would not anticipate, like, certainly not like 30. But to get into like 27-ish, like I could see that. But am I necessarily going to go and bet on that in the options market? No, not necessarily. Um, it's a slow season. Um, we would otherwise be in a kind of slump, right? Like if we didn't get the bond offering, we would be kind of just sideways and down maybe for about 2 months, with maybe volatility to the downside. What's weird is like, Ryan Cohen just went and just put all of that volatility sales. He took everything that would have been sold over the course of the next 2 months and just stuffed that into a weekend. So I don't know. Signs are good. I mean, if you're asking me like what I think, I'll say this, right? I'll say I'm inclined to think that it's more likely than it otherwise would be that we get some price appreciation based on the degree to which risk to go long IV is as low as it is, right? So a good way to gauge the likelihood of an upside event occurring is by measuring the pricing of going long volatility. If it's not particularly expensive, that says to me there is some likelihood that traders will seek to is more likely that traders will position themselves such that they may take advantage of long volatility, given that it is being priced at a discount. Yeah. The SPAC King returns. You can see the headline now from like Benzinga. Seems like no. Yeah, I know. That would be cool. Back holding what, man? If it's shares, you're good to go. As soon as IV comes back, those are nice, beautiful collateral to go ahead and, you know, go ahead and sell some volatility. You can easily get that cost average. Yeah, average $1 a month. Give yourself 6 months. You're all of a sudden it's like you bought it at this price, right? What can IMT? See that post on that today? Oh, all right. I just logged in to see this. We have just been informed that Canada, a very difficult country to trade with. The Truth Social tweets. Possibly the worst to ever trade ever. They're so bad at trading. Let's see if I'm actually. What can I make today? Usually post on Superstar. Oh, apparently Goldman Sachs just bought. Do we know why? That can't be now. That has to be an amendment from like earlier. Yeah, no, we don't have updated institutional stuff. Yeah, currently I'm on the island of Cyprus in the Mediterranean. That is where I am presently. Yeah, that's the thing. I saw that, but it was like, but why would they? What did they file? Like, I can't. Seriously, man, I can't tell if you're trying to. Oh, okay, all right. So now it's unambiguous. All right. I mean, like, you don't have to. I don't encourage people to buy GameStop. Like, I talk about it because it's my only position and it's the only stock that I have traded for over a year now. But like, I mean, that's weird though. How can they? Did they file? Did they file late? They shouldn't have though. Like, that should have been posted like a month ago. Did they like amend a filing? Yeah, that works. That's solid trade. Yeah. Let's see if I can find what can I make today's post. Maybe you put it on. You say you put it on Twitter though. Oh, that's all right. So we can take it the week. Look at the week to come. Let's take a look over at. Yeah, let's take a look at the GEX here. So, oh yeah, did we get any moves on this position? Yeah, this guy's still in his short put position, which, good trade. That's lost a lot of gamma. But yeah, for now, I mean, still looking kind of. We do kind of ramp up to 25 here for next week. What's the 11th looking like? This is more distributed. This is as well. see. Do we get anything pop up here? We haven't had a ton of like super interesting options trades. Pretty light in terms of premium. Oh, that's a pretty big one though. Hmm. All right, this one's kind of cool. This looks like somebody probably rolled these. This is kind of aggressive. And these are both at the ask. It's 25 and a 33 at the ask. Yeah, it doesn't look like it's not a debit spread. It's just two different sets of long calls. All right, so somebody here thinks we're going to get some IV move. This could close in the money. Got to be in 2 weeks, got to be above 25.52 for this to be profitable. Obviously, if it gets a little movement earlier, it's fine. Unless he sold these. No, he wouldn't have sold these. He would have sold these, not these. But these are at the ask. Yeah, I think he's playing IV here. All right, so somebody today thought today was a good day to try to gamble on a move up into that next bracket there. Interesting. Could the market makers be buying from themselves? Well, how do you see that? Like, structure that a little bit for me so I can see what maybe you have in mind a little bit more clearly. Somebody sold. Oh, these are sales. This is rolling. 24s and 27s. Watch that be Richard. Oh, a little more deep in the money put action here. But they're at the asks. Somebody closed those. And just sold $5 down. Okay. Let's move that down. Yeah, so not a ton. So, you know, in terms of wow, do we have more failed? Oh, we should be getting some new fail data probably Monday, I think. Short interest data and fail data we should be getting. I feel maybe a couple days into the week for fail data. Oh no, Monday is the expected time. All right, I'm not going crazy. So yeah, we should get some new fail data. That should inform us about, any potential days of upcoming volatility. When is T plus? Let's see. When is T plus 33 out from this? 23. T plus 1, 2, 4. Oh, yeah. 1, 2, 5, 6. 1, 2, 3, 4, 5. And then we got a ways to wait for that, actually. That's not going to pop up until week of the 11th. That might be that. Okay. So, yeah. So that might actually be a trade related to these fails right here. So we have this cluster of XRT fails between the 23rd and the 29th. So these are likely related to what to the BTC front run trade and then the move down. So these are likely incurred as a result of that. And the creation window for these fails, the deadline for when an irrevocable VWAP has to be entered in order to clear those fails on the part of the authorized participant is the 11th. So the last of, these on the 23rd, the last day is the 11th. So that week of July 11th, I don't know, but if those were for then, maybe we trade up into it. Maybe they try to clear something like that beforehand. I don't know why you target. Well, that's the thing. I guess IV is just so low. It's just, you're really only worried about theta, right? You're not worried about IV crush. You're not worried about Vanna. You're just worried about charm on those. So maybe that decent trade there was something targeting this creation window that'll pop up out the week before July OPEX. We also got that run last year, right? We got something similar. That run up to, in my mind, it's always the Linarius run. This one. Yeah, we're kind of doing this, right? Like, we simmered down off of this into late June, kind of moved up a little bit, then down a little bit, and then boop, 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 boop. And then this was probably clearing May OPEX. So this was May OPEX tailwind out here. They did some clearing all throughout here. And then we went up, we kissed 30, and then down we go. So maybe we're getting a little of that, huh? Right here. This thing. So maybe we get a little something like this. and then we go down maybe into late August. But then what's different is we'll have to see what happens with rate cuts. So we got another FOMC. Next FOMC is 31st of July. So if we get a rate cut here, then maybe we do a little whoopsie-doo like in this run. We'll see. When I talk about volatility returning, when I talk about price appreciation, maybe around the corner there, I'm not thinking Bitcoin front run spike. I'm not thinking roaring kitty cat ears. I'm not thinking November, December IV run. Something more gradual. Return of volatility could mean we go up to 80 or 85%, right? Which is still high relative to like other stocks. But not necessarily, we're going back to 175 or whatever, Hey, cheers, never more than 12. Thanks for popping in. I'm glad you took the time to say hi. Thanks, man. Indy, the truck, it's the Ark. The Ark is being loaded onto the truck for Cairo. Yeah, it'll be interesting. We'll have a lot to comb through. Yeah, we should get short interest. Next month. Or next week. But I mean, we will see next week, but you know what I mean. Yeah. So a slow week, but hey, some cool stuff maybe coming up around the corner. Could be, I'm just maybe nothing too crazy going into July, but start to see a little bit of appreciation there. See what FOMC is going to look like end of the month, and then we always have quarter 2 earnings then in September to think about, and that typically does get accompanied by a decent IV appreciation in its own right in the couple weeks leading up to that. So I think we'll adjourn for today there. We also have we got Switch 2 sales to look forward to. That's going to be very good. Console cycle is going to be very good. Great to see you guys. Thank you so much for your questions. As always, part of my endeavors here, a lot of it is, boosted by the questions you guys ask and the support that you have as well for the channel. So thank you very much, everyone. Hope you enjoyed, I guess, right? Not every week can be frenetic and clutching our teeth with IV. So very cool to, have a week to kind of step back and be able to think about this stuff at a slower pace too. It has its perks, right? It has its perks. So I hope everybody enjoys the weekend, and look forward to seeing you guys. Look forward to seeing you next week. So take care. We'll see you then.